All right. Hello, everybody. Thanks for checking us out today. We're going to be speaking with ISCP Club members and roundtable hosts at the 13th Independent Sponsor Summit, SLB Capital, Scott Merkle and Matt Wrobleski. Good morning, gents.
Morning, Roger.
Hey, good morning, Roger.
Hey, great to be with you this morning. So I want to talk about SLB Capital. Tell me about SLB Capital Advisors.
Well, first, Roger, I want to thank you and iGlobal for speaking with us today. SLB Capital Advisors is a real estate advisory firm that is focused on sale-leasebacks. We happen to be the only firm in the country that is entirely dedicated to the sale-leaseback space. I would look at us as an intermediary that works with businesses that happen to own one or more of their underlying facilities. Our clients engage us to execute sale-leasebacks, thereby monetizing these owned facilities, providing the organization with capital for a whole variety of different uses. Our team here at SLB Capital Advisors is a collection of former investment bankers and corporate M&A professionals that really bring a unique skill set to the sale-leaseback arena. I highlight our backgrounds because at its root, a sale-leaseback is a convergence between a regular way property transaction and a corporate finance capital raise. And when running a sale-leaseback, we're wearing our marketing hats, and we're also bringing that corporate finance expertise to the table, because analyzing the credit of the underlying business is incredibly important, as is an understanding of the impacts on capital structure, on cash flow coverage, key credit metrics, and the like. The space we play in is certainly a niche, but it's a niche that we absolutely love because we bring a specific expertise to the table that enables us to go well above and beyond for our clients.
And your clients, who are your clients? What's your typical, client profile?
We provide advisory services to public companies as well as private businesses, many of which are founder-owned. But I would say the good majority of our work is with private equity firms.
Mm-hmm.
Sale-leasebacks can be a particularly helpful tool for independent sponsors. So we do work with a lot of independent sponsor groups in particular.
Mm-hmm.
And I'm thinking back over the transactions that we've closed so far this year. It's been on the sponsor side, it's been a broad mix. We've closed transactions with large buyout funds, with I'd say mid-sized, multi-billion-dollar private equity firms. We've worked with quite a few independent sponsors. The transactions, a lot of sale-leasebacks tend to be for middle market, lower middle market businesses. So we're working with a lot of private equity firms that are playing really in that sandbox.
Well, okay. So especially in the lower middle market, there's been a lot of activity, even in the last 2 years with what's been going on, I should say. But the broader capital markets are they're pretty wild. They're volatile right now. Tell me about the state of the kind of the sale-leaseback environment now, I don't want to time date the video because we want to replay this in the future, but given where we are right now in the cycle, tell me about the sale-leaseback kind of environment.
Yeah, Roger, happy to take that one. I'd say, while definitely not immune to volatility of the broader capital markets, I would say the sale-leaseback market, kind of classify it as definitely being open. There's been some volatility for sure over the past few months. And really, we're coming off of what we would see as really pristine market conditions, and Q4 last year and going into the earlier part of this year. And then we started seeing some upward pressure on cap rates in kind of late Q1, early Q2, as we really started seeing the interest rate environment moving up and volatility in the kind of debt markets. And so that's when we really started seeing the real impact on the real estate side of the ledger, which was kind of that late spring, early summer timeframe. Say while we've seen valuations, widen over the past 3 to 4 months, the market definitely has stabilized. There seems to be more transparency in the debt markets that have really been driving that volatility. And I think people have a more firm footing on where the market is today and kind of what the expectations are going forward, and the guidance that the Fed has given. And so I think people have a much clearer path as to where we're headed now than what probably people did, 3-4 months ago. So at the end of the day, I mean, there's a massive amount of capital that's focused on commercial real estate and specifically on sale leasebacks out there, which is continuing to drive a ton of interest in the market. And I'd say the other big driver that we see as a net positive in the sale leaseback space is that real estate valuations, relative to business multiples, will continue to be really attractive and will make sale leasebacks a really attractive capital allocation alternative for the clients that we work with.
So tell me this, is this just for real estate deals, or why should independent sponsors that are doing all kinds of deals consider doing a sale leaseback, and how does that compare to other capital alternatives?
Yeah, so Scott alluded to this a little bit earlier. The sale leasebacks really are a corporate finance capital raise. It's really a capital alternative that really needs to be weighed against all the other forms of capital that are available to sponsors and independent sponsors as they're either looking to acquire a business or they're looking at the capital structure of an existing portfolio company. So sale leasebacks can really play a pivotal role in that overall capital structure of a company. So it's really